Happy Friday, Pat.
Hey, buddy.
It's a busy Friday.
Yeah,
We're probably all going to be drinking in an hour. So,
frustrating. Frustrating.
oh, I'm telling you. So,
Frustrating.
I'm waiting by a thread for see if an offer is accepted by one of our YouTube subscribers. So, I hope we find out while I'm on the air here. But what we're going to do, we're going to look at the inventory today, what we see, 7-day moving average, and then we're going to jump over to the Cromford report and just take a quick look at some of the things that's going on in the market. There have been some subtle changes, and then I'm going to tee it off to you because it has been an interest rate bonanza the past day, and I'm sure your hair hurts. So on the last Friday, we had 5,175 listings, and I said, "Man, that's low." Well, we beat that. We have 4,994. And and I wanted to share one thing else. Since this channel has started, we've had 1,000 uploads and over 30,000 hours watched. So thank
Wow.
you for all you subscribers. That's pretty awesome, isn't it?
Yeah, it is. It's awesome.
And none of those are kitten videos or anything. So they're all real estate driven. So on the 7-day moving average, right here, I'm going to put us down in the corner there, make it a little bit bigger. But the red line's the number of homes that are under contract. The blue lines are new listings. And we had a gap there for just a couple of days, and then boom, now the listings are below contracts by only 28 homes, but it went back to kind of to where it was last year. And we're looking at the news on what's going on, and I'm not going to see it show up in the numbers for probably a few weeks if it slows down at all. But let's go ahead and just jump right into the lending news, Pat, because I'm sure everybody's just really itching to hear about that. And you put up a rate chart here,
Yep.
so
That
look at
was
that big red line.
those are the days you do not want to see. Yeah, the long bond, basically in a nutshell. I mean, the long it was right here. This number is plus 48. Is this right here? This green bond. So the market came back. Like you said, I'm going to try to keep this short, simple. Hopefully, me, I get kind of off in a tangent, but this number right here yesterday was minus 83. So that tells you the difference. That basically was one of the worst. We have days like that. Yesterday, like you said, it was minus 83, and there was a bond rollover, so it was like more than that. But it's like a bond rollover is like every 30-year note's got an infinite. They have a date, so they roll over a certain period. It's kind of, I don't even understand it, to be honest with you. It's very complicated, but this is minus 88. I think it was 87, 88. Now it's plus 45. So, and this was like plus 10. This number. So the 10-year Treasury, it was 1.94. Got up to 0.206. They're saying there's a next level at 2.14. But we saw some pullback today in rates. Obviously this, they bottomed out. This is pricing. Price and rate are inverse related. I'll show you the chart on interest rates. So basically this is going back, December, we saw this, so really, I said since middle of December, we've just had this staircase climb. So the last 2 months, went up, paused a little bit, went up, and paused again. So, I mean, we're going to start to see there's a big tug of war going on. Rates went up, and they went, these red on this chart, red is good actually. So, and these two different charts, red is good, and on the other one, red is bad. This one, red is good because the rates are coming down. But we saw the next level, they says 0.206, but if we go out further, it's like 2.14 is the next level, is right in here. So, as I told the people, our millions of viewers watching last week, I mean, people say, what do you think rates are going to do? I mean, you kind of look at past history, and we saw this run up. We saw a rest. We saw this run up. Now we're probably going to see this, back and forth. We might see some days where it kind of backs down here a little bit, but it's just been, obviously with the news, the inflation rate 7.5, and between you and me, we both know that inflation is running at a higher 7.5 rate. I think we're getting a break by the Fed's claiming that the interest rate or the inflation rate's at 7.5%, because we both know that everything else.
Well, I found
is really
it interesting that, looking at the headlines, they said that that it really exceeded expectations. And then you look at Mortgage News Daily, and it said that that the projections, we only beat the projections by like 0.1%. And it wasn't a huge number. They were expecting, I don't know, 7.4, and it came in at 7.5. And so the markets just said, this is going to make the central banks react harsher and harder than we thought. So now the conversation is Chairman Powell going to be like Bernanke, or is he going to be like, who's the first?
Volcker.
Paul Volcker.
Yep.
So and that guy, he raised interest rates on a Saturday, unheard of. And so the market right now is raising the rates. The Fed hasn't done anything, right?
No, they haven't done anything. I mean, well, see, that's the problem. I mean, what the average person doesn't know is when they'll hear it in the news back in March that, we saw Feds raise rates, they actually go down, because this is all the activity that's going right now in the bond market is they're projecting into the future. When the actual event happens, the reverse happens. Typically, rates will go down.
Yeah, buy on rumor, sell on facts. I mean,
so I mean, there's talk. I mean, now you're going to see, the cat's out of the bag. They're saying that they're going to do a half a point. There's I think the percentages now they think there's going to be a half a point jump is like up now 60 or 70%, or maybe even 80% chance. So, people say, what are rates going to do? It's just basically, anybody, and if anybody listens to the news, I mean, you can try to get some guidance as far as what's going on. But if anybody turns on CNBC or MSM or anybody, any financial markets, they don't know any more than, the guys on, they're me and you and the people viewing this show. They really don't. I mean, they got some technical guidance, but hell, I mean, if we lived in a perfect world, everything would work perfectly, because everybody would have all that information out there to act on it, but nobody knows. So
there's plenty of other things bubbling out there too that could make rates come back down. We just have to watch it. So.
Russia. If we see
unemployment, and jobs.
Yeah, jobs. I mean, I think the biggest right now, if we see rates pull, I mean, if Russia invades or something like that, you're going to see a rush to safety, which the bonds will obviously do well. So that'll be a short-term thing. So it's just bonds are going to be trading on now this, they're going to be stuck in this little channel, because a shock has been already over through it.
Yeah.
So, but now to relate it to rates, I mean, let's just talk real quickly here. And I know I got a question, but I just want to relate it to people, and people say, well, what, and we're going to get this. I'm sure you're getting this, or I'm seeing this on Facebook where people said, well, the market's going to slow because rates are up. Yeah, I mean, it's going to take out that average guy, who is real tight debt to income ratio, and it's going to take out those edge people that are trying to get qualified, because out of 450, I just ran some numbers real quick here. On a $450,000 purchase, 5% down, your loan amount, say 427. Okay. At 3%, your payment, principal and interest payment is $1,833. And at 4%, I ran my rates today at 5% down. It's 4%, which is still, historically speaking, great rate. Your payment would be $2,076. So it's a difference of $243 a month. So basically, I mean, if you've got a guy who's on the edge of the debt, qualifying, that's going to knock that guy out,
Yeah.
So.
Yeah. Let me answer this question real quick. I can pull those numbers. Last time I looked at the numbers of single family permits, they were still way behind of numbers that we saw, and not at the peak that we saw in 2000. I believe it was 2004. So they're still way behind, and the permits take 18 months to actually turn into a house, if not a little bit longer. So we have a way to go on that. But I think, one of the things on the rates that people need to look at right now is just don't panic. We had a day, we had a week where rates went up. And so now you got all the doomsayers. Just sit back and watch and look for a trend, because 1 week doesn't make a trend. And, and don't panic. Now, if you locked into a decent rate, 30, 60 days ago, then you're probably in a rush to go out and get something now so you can have that lower rate. But
typically you can't get, and typically, well, there's very few, typically you have to have a house already before you lock a rate. You have to have a property.
Okay. Yeah.
I mean, so that they're kind of, they're obviously probably scrambling around too, because, now there's a few lenders, I guess, from what I haven't dealt with this program, where they, you can lock and then shop, but most lenders, 99 out of 100, you have to have a property before you lock a rate.
Well, looking at some of the Cromford numbers, what's interesting is primary home buyers are down 15% versus last year, but home buyers using them for rentals are up 26%, and second home purchases are up 25%. So the primary home buyer is already sitting on their hands because they just can't find anything because of that low inventory number I just read you. Mm-hmm. And it's just, and if this rate increase starts slowing things down, it's not going to happen fast. If you look here, Fountain Hills went down a little bit, and it says that it's losing a little ground, and it's been joined by Chandler. But look at those numbers. The Cromford Index is 682, and Chandler's sitting there at 465 when a balanced market is 100. So they're still way in the stratosphere as far as being in favor of sellers. So it's not a panic time if you're planning on selling your house to say, oh my God, I gotta get rolling here. The momentum is dropping, but there's still no confirmed signal showing a turnaround. Supply remains very tight, and there are some spots where it's reaching record lows. One of those is Paradise Valley, but even Maricopa is the lowest one on the poll here, and they're still 268. Mm-hmm. So, there isn't a huge change. Now, this data is, behind us a few days. We'll see if any of that changes, but based on the listing numbers that I'm looking at, I think the index is going to remain about the same. So what will happen is if interest rates are making buyers pull back, then the listings will gradually increase. But you'll need our vacancy rate for rentals to also increase. And right now it's about 5%. So it makes buying homes and using as rentals very attractive. Mm-hmm. Now, Zillow came out and announced today that they're going to focus more on this new app that they're going to have, their magic app. And they said that they had a good earnings call where they are not losing as much money as they projected they would by $100 million. And they're selling all these homes to investors. They're not even turning them around and selling them to you and me. And they're getting an exemption. I think it's 57 here in Arizona, where they don't even have to disclose what the sale price is. And so they're just telling everybody, hey, we're moving these houses like crazy. It's going great, but we're not going to tell you how big the loss is. And we don't want anybody to see it. It's kind of weird, but they're focusing on going back to charging real estate agents to advertise on Zillow, working with a select few, and trying to integrate all of the processes like with their app and lending. And they're really pushing people to use Zillow lending. And Tyler here says, Cromford demand percentage has been going down every day. Is it because there's nothing to buy? Yep. There's just nothing out there. I had a search put together. Get this. The young lady wanted a pretty basic house with a pool, with a walk-in pantry, entire East Valley, except for Queen Creek and Santan, and up to $500,000. You know how many there were, Pat?
6.
2. Only 2. And they weren't very good. That makes people just stay home. I mean,
it's and like you said, once again, we've talked about this. I mean, those 4,700 homes. Okay, you take Joe and Mary Smith, the average, at Joe average. Those 40, once again, those 4,700 homes. That's not, if you think about it, those 4,700 homes aren't all 4,700 of those are going to be desirable for you to buy.
Oh no, if I pull it up, it just, I mean, there's a
I mean,
lot of, um, well, let's just take a look. That's an interesting
can we
thing.
swear on this thing? Say crap or
Let me do, yeah, it's okay to say crap.
okay.
So we're going to look at this 4,900 homes here. I'm going to roll this over to my other screen. We'll do this in tandem. So, so here's what I look at. There's 5,021 now. So we've gone up. So not by much. So now I hit list and it's going to sort from the lowest price home
Yep.
up to the highest price, right?
Yep.
I can change it, but um, in this mix, we're going to have an $18,000 thing in Seligman, a $19,000 thing in
Thing.
Hayden. Here's a $19,000 trailer mobile home. And
Go. How far down the list do you have to go before? I mean, yeah. I mean,
well, I'm down to, these are all mobile homes still.
yeah.
And well, let me filter out mobile homes. Let's just go single family. Okay.
Yeah. Okay. Yeah. There you
See what
go.
we got. We have 4,049. So what's it look like? The first home coming up is 19,500 in Hayden. Here's one for 25K up in
Miami.
Miami.
That's, you know what? That's a good, nice. That might be a good fix and flipper.
That's a beauty.
You know,
That's a beauty right there.
I shouldn't be making fun of you. I
Here's
mean, I
Benson.
honestly, but
Now
oh,
this shows areas far out of our area here. I don't know why
yeah.
it pulls them that far, but it gives you an idea what's in that, that 4,000 homes. So you start whittling down to what you like, and you're not going to find what you like. And somebody even made a comment the other day and said, Rick, I'm selling my house over by Dobson Ranch, and I'm really worried I'm not going to find something that I want. And I said, well, there you go. I really that's what's happening. And then inflation. When we look at inflation and everybody's trying to point the finger at this guy and that guy and everything, I mean, here it is. This is M2 money stock. There's a lot of money in circulation, and you got too much money chasing too few goods.
Well,
Now you have not only this trucker strike in Canada, but you've got a convoy talking about going from the West Coast all the way to Washington, D.C., and you think you're not getting groceries now. I hope they get that thing resolved here pretty quick.
Yeah.
One.
Well, real quickly too, to add out, I mean, it's going to be a weird time because, another thing is too, okay, you've got adding to all this, you got inflation, you got the word, people worried about, what's going on. People are number one worried about if I sell my house, can I buy another house? Then you've got other people that basically, and what's creating this inventory woes is with rates going up now from say 2.99, 2.87, 2.99, 3% to say 4.8, 4.25. Now that it's going to hurt that move up buyer because rates have gone from 3 to 4, 4.25. Because okay, I could buy this other house. I'm going to pay more for it, but then now now I'm going to trade in my, 2.75 interest rate for a 4.25 interest rate.
Mm-hmm.
So that does not help the situation either. So it's kind of like it's causing this stagnation, the market to be stagnant because there's that percentage of people that are like, yeah, the move up buyer now is kind of screwed.
Well, everybody's in a tough situation. I mean, and we
not to
tend
be Debbie
to think
Downer,
that it's all in Phoenix, but here's where I grew up, Pat, and wait till you see how many listings are available. This says between a town of about 25,000 people, Washington State, and they have 25 listings. 25. And now I know they have more than 25 real estate agents. My dad's office had 30, but I don't know how they make any money up there, how they do it. There's only 25 listings.
Yeah.
You can go on Zillow and go city by city and it'll shock you.
Interesting.
It's, so
it's going to be, as I talked to last week, it's going to be I think this is going to be a sloshy market. Like you said, and the reason I brought up this point about the people staying put, it's just you don't have the velocity of homes like you did,
Yeah. And if rates continue to climb, they have more reason to dig in, right?
Yeah. They're just going to dig in their heels. So you know what? We're just going to stay here. We're at 2.75. Rates are now at 4.5,
Gotta stay put. But we need some There's jobs coming. Arizona leaders see a huge opportunity for the semiconductor industry as they have $52 billion CHIPS Act. And this, in short, in summary, is Congress is doing a Chips for America Act into law where we want to bring manufacturing
Yep.
back here. And Portland and Chandler and the new Taiwan plant up in North Phoenix are going to be the beneficiaries of this.
Yep.
As we start bringing that industry back. So we've got a lot of jobs coming in, a lot of building going on, especially up in that northern part of Phoenix. And that there's a whole bunch of industries and warehouses going on up there that are totally unrelated to the chip industry. So it's going to be interesting to watch and see what happens. So we're not seeing anything. I think the number to watch that we've always said, and we're going to continue to say over and over again, is the inventory number. We're seeing rates start to move. We're seeing some buyer fatigue. We're not seeing investors backing off yet. There's still a lot of cash out there. They're purchasing. If that starts to change, maybe we'll start seeing inventory climb. But right now, it's just tit for tat. We get 4,000 homes on, 4,000 go under contract. Something has to shake up in that number. And when we're going to see it in other states first before we see it here, and it's going to change slowly. So people don't need to panic and go, I got a list today. This is looking bad. It's not going to happen that quick.
No.
And, and there's plenty of resources to look at the data and check and see what's going on. So with that in mind, where are you watching the Super Bowl on Sunday, Pat?
I'm a Packer fan. The Packers are the Packers playing?
No, they are not.
Huh. Okay, I probably won't be. I'll be watching. Who knows where I'll be watching. I'll be interested. I'm going to be interested to see who's at the game, celebrity wise.
I'm rooting for Cincinnati, but I got to say
like
that
Cincinnati. Yeah.
That quarterback, he's a great quarterback. But I just watched like when they won that playoff game the other day, and he comes out of the shower and he's got his hair all slicked off and he's got a black turtleneck. He's got a gold chain on. He looked like a figure skater. Wait, that's the quarterback.
Rodgers is definitely going to Denver. I think he's going to Denver. I'm done with him. I'm glad he got 4 MVPs because that does me that and a quarter gets me a cup of coffee. I can really give a rat's ass. I hope he gets another 4 MVPs and no Super Bowls. Narcissistic.
Yeah. Well,
Anyway,
at least he's not that. When Brett Favre went to Minnesota after he left, that had to bite. So
So I don't know. I'll probably be watching. Whenever the Packers don't make it in, I get ticked off. I'm like, I'm not going to watch the Super Bowl. Screw it. And then I end up watching the damn thing anyway. So I don't know. Who knows? So,
all right. Well,
all right, buddy.
Have a good weekend. Maybe I'll see you on Sunday. We'll watch the game together or something.
Yeah,
so
we'll see what's cooking, dude. All right, buddy.
All right.
Hello. Say hello. Goodbye to everybody.
Yeah, our millions and millions of viewers. See ya.
All right. Ciao. Bye.